like a year ago, San Francisco was really a shit show. And it's turned around. And I think what happened in San Francisco is, once the city kind of got better, cleaner, safer, whatever you want to use, then you see businesses come back. From my vantage point, 1,200 miles away or whatever it is, that's what I'm seeing. Am I wrong?
A good assessment of the situation. That kind of sums it up in a nutshell.
So this week what I want to do is talk about income and expense. And I'm going to approach it in two ways. The first thing that I want to do is talk about very basic, very simple, very generic income and expense for your business. And the way I'm going to do this is I'm going to present to you a federal tax form called Schedule Schedule C as in Charlie. So in the packet that you guys have, the notes for today, there's a blank Schedule C, and then there's one that's filled out. So we're going to cover that first. There's a couple little notes that we're going to make. I'm doing this very generically, and after I present the Schedule C, I'll pause. You guys can ask your questions if you have any. So hold your questions until I get through my presentation. Then what I'm going to do, the second part of this, is we're going to look at another small investment property. And I was on the phone last night with Mercedes, and I said, hey, can you just pull me off a few duplexes? And she did. And ironically, one of them is like a block away from the property in Lakewood that we developed and sold. And ironically, of all the little properties we've looked at on this call, this one's actually not too bad. But the broker did make some mistakes, so I'm going to point those out. So we'll look at that. Okay, so I'll show you the listing. I'm going to show you a Schedule E, so we can just have a quick review of that. And then I built an APOD to go with that to show the income expense. Okay, so we're not talking about appreciation today. We're just talking about income and expense. Okay. All right, so everybody has the packet in the notes. So I'm going to switch over to that now, and we'll start going through Schedule C as in Charlie. All right, so this is what a Schedule C looks like. This is just the blank one. I have one that I filled out this morning that goes after this one, but I'll just start by pointing out a couple of things about the blank one, okay? So first of all, in the upper right-hand corner, it says put Social Security number. But down here below in box D as in David, it says employer ID or number EIN. You can do either on this form. So if you're not real excited about spreading your Social Security number around the world and you file a Schedule C, you can apply with the IRS for an EIN, and that will substitute for your Social Security number if you want to. Don't have to, but if you want to. So before I go any further, I probably should have said this first. This is the tax form that you file for your business operations if you are a sole proprietor, okay? And that means one person. If you are in business with another person, you're supposed to use a different form. Now, whatever you do is between you and your CPA and your higher power. I don't really care. But this is supposed to be sole proprietor, sole meaning one, okay? And most people that are self-employed file this one. Real estate people, I know dentists that do it this way. I know lawyers that do it this way. Salesmen do it this way. This is the simplest, easiest form to use if you work for yourself and by yourself, okay? However, you can also use this form if you are an entity known as an LLC, a limited liability company. Okay, so you can still be an LLC and set up with your Secretary of State and all that kind of thing, and you can file the Schedule C for reporting your taxes. If you are a corporation, either a subchapter S or a C corporation, you have to file a different return other than Schedule C. So Schedule C is sole proprietor, but you can still be an LLC entity and file a Schedule C, right? Okay. Talked about that. Okay. Line F, accounting method, cash accrual or other. Most of you will check the box that says cash. And in accounting methods, what the cash method means is that you recognize.
Oh,
Okay, you got to mute there, whoever's talking. No, I'm not going to hold on. You can hold on. The cash method means you recognize income and expenses when they're paid or received. The accrual method means you recognize income expenses other than when they're received. Most of you will check this box. Line G here, G is in George. Did you materially participate? This has to do with something called the at-risk rules. Most of you need to just check yes and don't worry about it. If you bought the business in 24, check that one. Let's see, any payments for Form 1099, yes or no? Let me talk about that for just a second. If you have someone working for you who qualifies as an independent contractor, and there is a whole set of rules that IRS publishes about qualifying for an independent contractor, I'm not going to get into this now, and you pay that person more than $600 a year, you're supposed to give them a 1099, and then you as the payor also file Form 1096 and send that to IRS. Okay? Now, the reason that people like us who hire people to work for us would use a 1099 is that we don't have to pay FICA tax on the person working for us, the Social Security, because that's a 50-50 deal between the employee and the company. But again, there are rules at IRS because they know about this little trick that some people pull, and they want their Social Security money. And being 63, I want them to have Social Security money now as well. I have a selfish vested interest. Okay, moving on down the sheet. Okay. Gross receipts, returns. Now, what we'll do next is I'm going to get into the example, but let me give you some context about the example, okay? I'm going to show you the exact same sheet, and I filled it out this morning. It's a dummy. I just made this stuff up, but I've done these enough times. I know how they work. But I'm just going to use round, simple numbers, and I'll explain some of this stuff as I go along. There will be some things that you want to make notes of. Since nobody here that I know of sells a product, a physical product, I'm going to disregard the cost of goods sold part of the Schedule C. I will make reference to it, but I'm not going to make a big deal out of it because most of you are in the service business, so that doesn't matter, okay? All right, so let's jump in the packet, and let's just jump down to, I can get my cursor to work here. Come on, little cursor. I guess I have to pull the wheel. Sorry. Oh, that's that one. Let's go down to this one that's filled out. Okay. There's a page 2 on Schedule C, but I'll get to that in just a minute here. Okay. So this is a dummy that I filled out this morning. My name, then line A, I put the activity is business education. And then in box B over here on the right, there's a code that you have to put in. So you have to look that up for your business. And I called it Joe's School. Now, I filled out this employer ID number box here. I would do either this or the Social Security number. I already explained that. Line E, 1313 Mockingbird Lane. Just a quick human interest story here. Who knows who lived at 1313 Mockingbird Lane? Somebody must know. Come on, people. Come on, products of the 60s. Who is it, Craig?
What was it? Wasn't it Sam Spade?
No.
oh, it's the Munsters.
Yes! Come on. It was the Munsters. All right.
It's the Munsters.
1313 Mockingbird Lane. Exactly. Okay. Okay, so F through J, I talked about this. These little arrows I put on here are just kind of things I wanted to point out to myself. Okay, let's go to the income part. And I just said, in this activity this year, I made $100,000 in gross income. So in line 2, no returns and allowances. Line 4, no cost of goods sold. Line 5, gross profit. Line 6, no other income, no gasoline or fuel credit refund, none of that stuff, just $100,000. Okay, that's part 1. Okay, part 2 here, this part right here, this is all your expenses. Now this is the part that oftentimes people don't fill out correctly. I'll put it that way. Okay, advertising, I just put $500. Let's talk for a minute about car and expense. Okay. Now here's a couple notes that you might want to make about car and expense. All right. So you have 2 methods that you can use in your car and expense. One method is the cents per mile, and the other is the actual cost. Okay. Now there's 3 or 4 actually different kinds of mileage that you need to worry about. I'm just going to say what they are. I'm not going to explain them today. There's business miles, there's personal miles, there's commute miles, and there's medical miles. All right. Your commute miles and your personal miles, you don't get any expense. Your business and your medical, you do. So for tax year, I think it would have been 2024, the cents per mile allowance was 70 cents per mile. So you used to add up all your business miles times 0.7. That dollar amount is what you'd put on that line in Schedule C. The other way to do it is to keep track of your cost of gas, cost of repairs, cost of bridge tolls, cost of interest on a car loan if you have it, and your depreciation. Now, I've done all these calculations separately. It's been a while. But I can tell you that generally, IRS uses pretty inexpensive vehicles when they calculate the cents per mile. If you have a reasonably priced vehicle, which, what is that now, like $70,000? I mean, I saw last week a new car, the cheapest one's like $50,000. I was like, what? But see, I don't buy new cars. You know, I just don't. I buy cars that are at least 2 years old because they generally depreciate 50% in value in the first 2 years. I just get a can of that new car smell stuff and I'm good. But if you have a newer car or a nicer car, you might want to just see which method benefits you. Okay. Now, another little thing I'll just put as a side note is something called listed property, Listed. Listed property is certain items that people commonly use for both business and personal, like your car, like your phone. Here's the rule. Once you go over 50% use in any tax year on a listed item, don't ever go below 50%. It is a nightmare to go back and recalculate all that stuff. Okay? And I say that for people that have 2 cars or more. And you get a financial benefit if you use both of them more than 50% for your business. Okay? But that's where I put in $9,500 on this one. Okay, contract labor, that would be, if you pay them more than $600, it's a 1099. But whoever you pay contract labor. Okay, depreciation and Section 179. Let's talk about that for a second. I have done and will do again another one of these webinars where I will just talk about depreciation. For now, I'm just going to draw a line between depreciation and say there's 2 kinds. There's Makers, MACRS depreciation, that's for personal property, which is what we're talking about in Schedule C. And there's something called a Section 179 allowance. What a Section 179 allowance does is allows you to recognize the entire business portion of the cost of the asset as an expense in the year of acquisition. I used a key word there, the business portion. So if you buy a car and it qualifies, and use it, let's just say you spent $50,000 on a car and use it for 80% business in the year of acquisition, if it qualifies, you can write off $40,000 of that in the first year, which is 100% of your business use, which in my example would be 80% of the total use. Your smartphone, your computer, all that stuff, you have an election to either depreciate using MACRS, which is the Modified Accelerated Cost Recovery System, or you can use a Section 179. Okay, that's a tax planning item. I'm not going to unpack that a lot deeper, but that's what they're designating here on this form. Okay, employee benefits, insurance, other than health, interest, don't have to worry about that. 17, legal and accounting, that's obviously what it is. Line 18 is office expense. Now, I'm going to contrast line 18 with line 27A. Okay, now this is just kind of parsing, but I'll get to 27A in a minute. So office expense is things like, paper, staplers, supplies, just stuff like that, okay? Line 20, this is rent. Okay, so I just figured for the 6,000 number, $500 a month for a year. Pretty simple. Supplies not included in part 3, which I'll get to in a minute. I put in $400. Okay, deductible meals. Now, there was a time when business meals were only allowed a 50% of the cost depreciation allowance. That has been modified back to 100%. Okay, but it has to be a business meal. It can't just, okay, I don't want to get too deep in this. Everybody has something called a tax home, which for most of you is just where you live. But you have to travel, I think it's 35 miles outside of your tax home and be on a business activity to be able to deduct a meal. It's either 25 or 35. I can't remember. It's in the book somewhere. But if you're just kind of like, I was showing houses and I was 5 miles away from my office and I went and ate lunch by myself, not with a client, but I wasn't outside of the concentric ring, that's not supposed to be deductible. If you're inside of that ring of 25 or 35, whatever it is, and you had a business lunch with a business client, and I would put a little note in your diary that you did, then 100% of that meal is deductible. Okay. All right. Utilities, I just figured $100 a month. Okay, I'm going to get to 27A on page 2. So if I add up all my expenses, it's $22,900. So I have a tentative profit of $77,100. Okay, pretty simple, pretty straight up, not that complicated. Now on the next page, and I put my name and my TIN up here at the top of the page. That's important to do. Every page should identify the TIN or the EIN or the Social Security number. But this is part 5. This is where I just took that $3,000 in expenses and just expanded it a little bit more. Okay? A basic rule about preparing an income and expense tax form is you kind of want to minimize the part that says miscellaneous or other. They want to see a little more detail. Now, I'm not here to say if you don't do this, you're going to get prosecuted or audited. That's not my job. I've been a tax preparer. Well, I was a tax preparer a long time ago. I've always kind of been a bookkeeper. I'm kind of a math guy. Duh, does a pencil. And so I keep pretty good records. Okay? And so when I fill out my tax returns, I don't cheat. They're accurate, but I know the rules, mostly. Or I ask somebody who, if I don't know the rule, I ask somebody else. But the point is, keep good records, fill out the forms correctly, and you should be good. It says on right above or right below the part where you sign Form 1040, under penalty of perjury, I swear to God, put a needle in my eye, that everything on my tax form is true, accurate, and correct, or whatever it says. It's that part. And the point I want to make is, you saying that my CPA filled it out wrong is not a defense. Sorry, it's not. IRS doesn't care. They don't care about your CPA. They're not going after the CPA. They're going after you. That's how it works. Okay. Time out. Questions, comments about Schedule C? Yes, ma'am. Go ahead, Christine.
Do you have to have an LLC to do an EIN number?
No.
Okay.
You just have to have a DBA business name. Yeah, and I would advise get a business license with that name, like, Christine's Properties or whatever, but you don't have to have an LLC to get a separate taxpayer ID number.
Up here. Oh, okay. And then you were saying for a qualified independent contractor, we give them a 1099 for the work that they've done for us, and then
For the money you've paid them,
1096.
yeah. And the rule is if you pay them more than $600 a year.
Yeah. And then is there an app for expenses that we're calculating, like if we wanted to do, do you use a car app or anything for mileage, personal, as opposed to, what do you use?
I do. I use one called RealtyZam. RealtyZam, and it has everything in it. And the minute I get out of my car, I add in my mileage, and all your receipts you take a picture of every receipt. And then at the end of the year, I just print that off for my tax person. I love it.
Can you put that in the chat?
Sure.
Thank you.
Sure.
Because there's three different ways you can keep track of mileage, okay? You can use your actual mileage every day, you can do 1 week per month, or you can do 3 months per year. So what I do is and I've done this forever, I just take 3 months every year, and I keep track of the 3 kinds of mileage, and then I extrapolate it to the full year. That's how I do it. That is allowable. Okay?
Thank you.
Yep. Jacques, what do you got?
Joe, where does home office come in on this, or is that not used anymore at all? I know they tightened things up on that.
Okay, so I'm not here to give you tax advice. I'm just going to tell you what I know.
Okay.
When I was at that Moscone Center NAR gig, something happened that was really kind of funny. So they have a green room where all the speakers, warm up and stuff. And so I met this guy named Joe. And the other Joe was the head of the IRS for the entire state of California. And he's like, "Nice to meet you. What's your name?" And I said, "William." Anyway, that was kind of a tax joke that didn't work too well. No, he's a great guy. And he was telling me because we actually talked about the home office. And he goes, "Oh, yeah, it's totally legit if you do it the right way." But he goes, "We did an audit, whatever it was, a while ago." And he goes, "Some guy tried to expense his whole house as his home office that he was living in." Not allowed. Okay? So what IRS allows you to do is to apportion.
Right.
And so the rule about home office is it's supposed to be for the sole and exclusive use of your business activity. Okay? And it's supposed to be, as I've been advised, the place where you conduct the major portion, typically, of your paperwork activity and or meeting clients there. Okay? So if you do that, you can expense the business portion of activities, you can expense the interest on debt on a mortgage, and you can also depreciate that portion of your home that's used for the sole and exclusive use as a home office. So yes, I have used the home office deduction. I've never been challenged on it. I have all the documentation. And what I do is I'll just draw a little floor plan out just to have in my records and measure the square footage, and that's how I do the calculations. So, if you follow the rules, it's fine. That's the one deduction people seem to have the most trepidation about. But yeah, you can do it if you do it the right way.
I've had a couple of CPAs warn me about, or when I was doing real estate, warn about don't do it because it has a high rate of audit if you put it in.
I've heard that too. Okay. and you have to kind of look at the political environment at the time as well. And that's just the reality. You know, I did all the coursework many years ago to be an IRS enrolled agent. So I've been around this for a while, and I have some friends who are EAs. And it was right before the pandemic. I was talking to an EA who represented one of my clients who was selling an apartment building. And I asked her about that. I go, so what's going on with audits right now? Now, this is during the first Trump administration. She goes, oh, they're like non-existent. They don't have any money. Trump's firing everybody. Morale's way down. That was the state of the IRS back then. Biden came into office, and he's like, we're hiring 80,000 new agents. This is ridiculous. You know, we want our money. Okay, so there is a political element to it as well. And there's enough information on the internet about your chances of getting audited. I'm not really here to comment on that. But what I will say is the rules are the rules. And if you follow them, I wouldn't worry about it. And I've had several clients and students tell me, oh, my CPA says don't take the home office deduction. You're going to get audited. I don't necessarily agree with that, but I will tell you, you should take the advice of the person that's doing your taxes over me when we disagree.
Okay, thank you.
Okay. I wasn't looking. Craig, was your wife the EA? Is that right?
Yes.
Okay,
Yeah.
cool. Would she be willing to come on as a guest sometime and talk to us about life as an EA?
Sure. I think that could be.
Why don't you ask her and you and I can talk offline? Okay, that'd be awesome. Yeah, so an enroll agent has the same standing as a CPA or an attorney to represent a taxpayer in an IRS audit. Most people don't know about EAs. It's not a term that you hear a lot. But yeah, so that's what they are. I'm not one. I didn't renew my stuff and all that kind of thing, but it's good education. Okay. So there's a one-pager, and we'll just cover this. Sorry, I put the wrong thing in the packet, but let's just go over this real quick, and then we'll get into the APOD. All right, so there were a couple of reasons that I picked this one, and Mercedes sent me a few of them. One reason is this one's like a block away from that house that we developed the lot on. So I know this neighborhood fairly well. The ask on this is $635,000. Now, just for frame of reference for your residential folks, we sold a pretty much same year build, same style, single family home, not a duplex. We got $424,000 out of it, something like that. These guys want about $200,000 more for another side. Our property was a 2-bedroom, 1-bath with a giant bonus and a garage. So this is two ones. I don't have the photos of the inside, but it sounds like it's been remodeled. And I'll just point out a couple things here, scrolling down here. So this is the taxes, $5177. The insurance was listed as, is it on this? Okay, this one was 10 years older than ours. This one was built in 51. Okay. Sorry, I messed this up again. The insurance was on the next page. It's on the APOD. Okay, it was. I'll tell you what it is in a minute. But this gives you the basic gist of it. You guys have seen these kinds of things a million times before. But let me go back to the APOD and unpack that for you. Okay, so here's the APOD right here, which is a one-page document, and it ends down here. All right, so this duplex has 2 units, and the realtor says you're getting $2,300 a door. So if I multiply that across, that's $55,200 a year. The realtor in their notes put in 6% as vacancy. That's $3,312. They said the real estate taxes are $5177. They also said the insurance is $1,563. Now, am I? Sorry, I guess you weren't seeing that. Well, you didn't need to see it. You saw it on yours. Okay, so I'm gonna stop there for just a second. All right, so this property was built in 1951. This property is 70 years old. I would be very diligent in my due diligence about deferred maintenance. Does that make sense? Roof, plumbing, all that stuff, okay? It's a brick building, which is good, northwest, where it tends to be kind of wet, but I would be diligent about my investigation because the realtor put in no other expenses, okay? But with no other expenses and only 6% for vacancy, if we look at the debt service, the 39,540, I'll show you that in just a minute, the NOI, the ADS, this thing is actually positive cash flowing about $5,600 a year, and that's with new purchase money financing. And I just have to say, now, I have not interviewed this realtor. I don't know what other stuff is going on, but if I just take what they've represented, this is like the first positive cash flowing duplex I've seen in probably 3 years. Okay, but I am a bit skeptical because I am. Okay, let's continue. And then on the next page here, I have what I call ROI notes. Now, these are just calculations I did this morning. I'll explain these to you real quick. So in this first section right here, I made an assumption that it's doing an 80% loan to value, 6 3/4 at 30 years. Okay, that gets me to my monthly payment, which is this calculation here. If I multiply that times 12, I get 39,540 here as my annual debt service. Okay, so this number right here, 39,540, is this 3295 times 12. That's how I get to this. Sorry, these browsers just want to just throw AI at you all day long. If I come up here, this is the bottom line of the APOD. So the net operating income minus the annual debt service equals the pre-tax cash flow. Okay, not too bad. This calculation right here, what I did was I took the NOI and divided it by an 8% cap rate, and I got 564,350. Okay, so here's the reason I used the 8% cap rate, and I apologize. When I put this in the chat, I only printed one page. There's 2 pages. And the realtor put in the notes that it's an 8% cap rate, okay? And the reason I'm pointing that out is if you use the realtor's 8% cap rate and use the realtor's represented income, vacancy, and expense information, the price should be $564,350. Instead, the listed price is $635, I think? Yeah, $635, okay? So that's incorrect. This is what I would say. Okay, so the real cap rate, if you take the actual numbers represented by the realtor and you divide it by the price, the real cap rate is actually 7.11% at the $635,000 price. It's not 8%. Okay, so what that ends up meaning is, I mean, that's a price difference of like $90,000. It's fairly significant. And then I wanted to see what is the cash on cash return. So that's this calculation down here. And the metric for cash on cash is the pre-tax cash flow divided by the down payment. So 20% of the asking price is $127,000. So it's making about 4.42% on an ongoing basis. But that assumes that the income and expense are correct, especially the expenses. Okay. I'm going to give you a couple of points of reference because that's what I do in Does It Pencil. So this here, this cash on cash, which is the overall annualized continuous rate of return on cash invested of 127,000. This offering will earn us 4.42%. That assumes that, again, the expenses are correct, you get all your income, and you only have 6% vacancy. I talked to one of my money guys at the end of the day yesterday, and I asked him, what is the money market fund at Schwab that I have some of my cash parked in? What is that earning today? And I think he said it's like 3.9. Okay. And on that fund, no risk, no vacancy, no tenants breaking in and using drugs, none of that kind of stuff. Okay. No management. So you have to kind of keep that in mind. There's another company in Seattle right now called Legacy Capital Group. And I know these guys because I've actually gone in-house and done training for them. So I've met their president and we had dinner and all that kind of stuff. So I know who these guys are and they're legit. They're hard money lenders. And right now they're advertising on Seattle radio, on the biggest radio station in Seattle actually, that they're offering on a 90-day yield 7%. So if you take your capital and invest it with them for 90 days, they'll give you back 7% plus your capital. Okay. Now I don't have a ton of experience with hard money, but I have a fair amount of experience with hard money. So I know what it is, I know how it works, all that kind of thing. That's a pretty good return. Okay. So that would be an alternative or two alternatives to the cash on cash return of this duplex property. Okay. Now, if we go back into the realtor's notes, and one of the reasons I picked this one was because of what I saw here. This says that there's a possible opportunity of putting in a third unit by renovating the garage. I don't know, I'm not highlighting it, but it's like right in this, it's this area right here. Possible finish renovating garage in the third unit. I guess the owner started doing it. Now that to me would be attractive, okay, depending on the cost of the rehab. Because now I can squeeze more income out of the same square footage. That might be of interest to me. Okay, depending on, you know, what other things a 70-year-old building might need to have done to it. Okay, so that's how you look at the income expense on those, right? Okay, Matthew, what'd you think of all that with the property?
Joe is very good. Yes, like you said, positive cash flow in this one is rare, but we are not sure if the information he input are correct. Maybe he's hiding some expenses. And then you have provided us with alternatives to invest in our money too. So
I think that's important. Not a lot of other real estate instructors will do that, but I think that's important because it's your money or your client's money. One thing I didn't show you here was Schedule E. Okay, we look at this in Does It Pencil Course 1. This is the federal tax form where owners report income expense, depreciation, and interest on debt. So if I was a buyer or a listing agent, I would want to see this Schedule E for this property for the last couple years. And this should give me a better understanding of all the income and expense information right in this area here. Okay. Susan, any comments?
Sure. Yeah, I'd look at any multifamily property as an opportunity to condominiumize. These days, I think that's probably a safer, better bet for rather than rentals, just because landlords have all the rights these days. So that's a big concern.
Did you say that the right way? Landlords have all the rights these days?
No. Tenants have all the rights. Landlords have none.
Yeah.
So yeah.
I was thinking about that while I was looking at these different offerings, great investment, upside, and I'm like, did you get the memo about rent control? So anyway, I've already made my one social comment today about the resurrection of the city by the bay. But let me finish up today with my comments.
Hey, Joe. Sorry, can I interrupt just for a second with an
Sure.
idea for a future class?
Yeah.
If you have any attorneys that do condo conversions, that would be really helpful.
I do know a guy.
Cool. If we could set something like that up, that'd be
Why
great.
don't you email me and I'll see if he can volunteer some of his services.
Well, actually, I kind of perked up when you talked about that adding a third unit. It kind of mirrored your opportunity that you made reference to, and the flip that you guys did. So I thought, oh yeah, there's the value add right there. So I was happy to hear that.
Well, my house in Park City, Utah, the first thing I did was build out an apartment in the basement, and just the rent from that paid 9/10 of the mortgage on the house. So, I mean, it wasn't yesterday. It was about 20 years ago now, but it worked. And it's the same thing. It's just a question of market, disparities. But adding a bedroom and condominiumizing are both what I call value add plays. Okay. So I said before, I'll say it again. It's very difficult to find buy and hold properties that will give an investor return absent appreciation. Okay. And that horse is dead. I've beaten it to death. That's why when I saw this one today, I'm like, 4% cash on cash. That's kind of amazing for a duplex. All right. And if you can put a third unit in there, that just makes it sweeter. The condominiumizing thing, though, let me just say something about this. I'm glad Susan brought this up because not a lot of people think about this. And I didn't either until I was in San Jose. That's probably 25 years ago now. And I had these guys from San Francisco come to Does It Pencil. And they had this duplex listed. And, it was even then, it was just, it was ridiculous buy and hold investment because it was, it was like next to the Painted Ladies or on Nob Hill or something like, sorry, you just don't get cash flow. But as we talked about it some more, we talked into the condominiumizing conversation. And I had done this on a separate property, not in San Francisco, but I kind of knew how it worked. And with my construction background, I said, look, what you need to do is you got to have a couple meetings. One is with the building department and one is with the planning department, okay? Because the building thing, if you're going to condominiumize, the big deal is fire suppression. Okay, because retrofitting buildings is not cheap, people. I've done this a long time. It's not cheap. You got to buy really low if you're going to retrofit. And a lot of it's because of fire suppression. The other thing to be mindful of is the off-street parking requirement in your jurisdiction. Okay, if you can check those two boxes reasonably, then you have a fairly good chance of being successful at condominiumization. Well, anyway, we ran the numbers on this, and as a buy and hold, even with a nominal rate of appreciation, it was sort of a mediocre investment. But if you could condominiumize it and you could turn that duplex into two resellable single fee simple units, it was a winner. And these guys did it. And they got a hold of me like a year later, like, dude, we would have never thought. And the client made a bundle, everybody's happy, go Joe, all that kind of stuff. So I think as we move forward in time, as you guys know, I'm in Washington State, and our legislature has mandated an increase in density and is a huge advocate of DADUs and ADUs and all that stuff. I love the idea of condominiumizing if you can check the boxes of fire suppression and parking requirement. So that's an excellent point, Susan. I'm really glad you brought it up. I wouldn't have thought of that.
Joe, this isn't a question, but this is kind of related to what we've been talking about, but I was reading an article this morning that Home Depot has developed a program using AI where if you walk in there and you have your blueprints for $250, there's a special term and I forget what it is, but they will basically tell you, figure out the materials or whatever you want to use. They will tell you what it will take to build that, do that rehab or build the building you're talking about or whatever. And it's like 2 days, 3 days, and they've got it back to you. And I'm not sure if Home Depot, all the Home Depots have it, but according to the article, the response from contractors and remodelers has been pretty positive.
Well, I'm not going to tell my best friend that she just wasted $250,000 on her son's 5-year degree with architecture. But thanks, Jacques. No, that's great. I mean, that's competition in a free market. That's good to know. I did not know that. So talk to your local Home Depot. My experience, and I've used Home Depot services, has been kind of hit and miss. I've not done this service. But if you get someone who knows what they're doing, Home Depot can be a great deal because Home Depot has economies of scale.
Exactly.
So, we'll see. We'll see what AI does moving forward. Okay. All right, everybody. Good seeing you again. Thanks for showing up as always. And next Friday, we're going to do our last installment, and it will be the day after Thanksgiving, and I will be here, and we will do internal rate of return next week. Okay. So, God bless you. Have a good weekend.
Happy holidays.
Go make a profit.
Yes.
See you later. Yeah, have a good Thanksgiving.
Happy